The second thing I want to talk about for today's stream is something that's quite personal and close to my heart. It's called the Delta Misconception. Okay, I see this time and time and time again, and I actually see it from experienced traders as well, which is quite disappointing. If you are considering taking the footprint tool or learning about the footprint tool, just be very cautious who you learn this tool from, because there's a lot of rubbish out there, and I'm going to show you what some of that rubbish looks like. Okay, now the misconception is very simple. People associate a delta, a cumulative delta on the day, with the positioning. Okay, so if there's a positive delta, a very high positive delta, people go, oh, there's a net long in the market, or there's a net short in the market. Okay, that couldn't be further from the truth. Right, there is only a net long in the market so long as there's been buying plus price change. Okay, so in other words, there is only a positioning in the market so long as the buyers have actually, for one, bought the market and actually been given reward for buying the market. Okay, so the first thing is, what does positive and negative delta mean? It doesn't mean positioning. It means that there's someone buying the bids, so there's someone lifting the offers, a buyer's lifting the offers, or a seller's hitting the bids. That's all it means. It doesn't mean anything else. Don't ever make any other interpretation other than that. If it's a positive delta, it means that there's been more offers lifted than there's been bids hit. As simple as that. Okay. Now, one of the things you need to, if you want to learn when there's positioning in the market, you need to understand the concept of initiative. Okay, when is the initiative taken, and when is there just a spread at play? And this is what I'm going to show you. I'm going to show you two examples from today, the 1st of April. No April Fool's jokes here. Okay, where traders go, oh, there's net short positioning, therefore blah 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 blah. Okay, the first market is our pound sterling. Okay, so this is pound sterling GBP USD. A lot of you trade it. As you can see, negative 3,200 delta, quite high. Okay, quite a substantial delta for the pound sterling. Low volume day. Most of you go, oh yeah, okay, there's a net short in the market. Now, if I told you that the sterling is up 135 pips today, you wouldn't believe me. You would think, well, how can it be up 135 pips and there's a negative 3,200 delta? Okay, and that's the crux of it. That's where the delta is misleading. It's a misconception to think that a negative delta means the market's short. It doesn't. Okay, how do we know that? Not because Brannigan tells you, but because we've got to go and be observant. We've got to look, what does the delta mean? In other words, we scroll back during the day and we go and look at when every time there was selling in the market. So we can see at 1 o'clock this afternoon there was some selling. Okay, we can see the delta, net 600 contracts. So we turned positive delta to negative delta. Okay, what happened to price? Right, if you go look, we accumulated negative 600 delta of these 4 rotations. Price didn't move. Right, we then accumulated another 500 delta. What did price do? It didn't change. Okay, so the net result is we just accumulated 1,300 delta and price is unchanged. Okay, price then goes back bid. What do we see? Selling again. What has price done? Again, accumulating selling. So there's more selling into the bids than there are offers being lifted, but the price isn't changing. Again, this time we see selling come in, so we see the delta goes negative and price responds. Okay, so we actually do see a little bit of selling plus price response. But again, if we fast forward for another half an hour, what do we see? The delta is still constantly increasing, but price is not going down. Okay. Now, if I just highlight this section for you, and you were to go and put a 5-minute chart up and look at this area between 130, 132 and 130, 152, you're going to note that a lot of selling has come into this area today. 130, 130 up to 130, 150. Okay, and every time it came down, there was selling, but the price couldn't go offered. Okay, so it doesn't mean that there's a short in the market. It just means that every time that the sellers hit into this bid, what's happening to the bid? It's reloading. Okay, so someone's just simply absorbing all of the selling. Okay, it doesn't mean there's a short in the market. It doesn't mean there's a long in the market. It just means every time the market came to this price point called 31.30 to 50, someone is reloading the bid. Right? And we know that because price is unchanged, even though the delta keeps getting more and more negative. Okay, that doesn't mean there's a short in the market. There's a number of reasons why that selling occurred and why that reloading occurred. Now, if you were observant today and you looked at the euro sterling, you'll notice that euro sterling's done almost 1% move. Okay, there's a lot of cross-market activity going on between the euro and the sterling today. Hence, why we've got the euro on the low, negative 3,000 delta, down 15 pips on the day. We've got the cable up 120 ticks, negative 3,000 delta. Okay, hopefully this misconception really drives home the point there. Don't be naive and think a negative delta means positioning. It doesn't. It just simply shows you the difference between buying and selling interaction. Now, very quickly, I'm going to show you another example of this wonderful fallacy. This time, German 10-year bunds. Okay, as you'll see, positive 10,000, pretty good delta. Okay, pretty positive delta on the day, and we are literally sitting 3 prices or 2 prices off the low of the day. Okay, we're down 60 ticks on the day. So we've got a positive 10,000 delta, but we're on the low of the day. Okay, ding, 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 what's going on? So again, we don't assume there's a net buying. What we go and do is we go and look, where's that delta been accumulated? And you just have to rewind to hop past 3. Okay, delta was pretty flat, nothing going on the day. We approached the low of the day, and suddenly we started to see some buying. Okay, what was this person buying? Some very big offers. Market then offered again, the selling came back in, and we saw that buying start again. What do we see that buyer lifting? Really big offers, really big offers. In other words, market came down to 64s, and there was a really big offer reloading. Okay, in other words, we saw buyers absorbing the bids and reloading the bids, but we also saw sellers reloading the offers and allowing those buyers to lift it off of them. Okay, and this was the interaction zone between 64s and 75s. That's where we saw the hive of buying taking place over the course of the afternoon. Now, does that mean the German Bund is net long? No, it doesn't. Okay, it just simply means when we came down to this price point, there was a lot of absorption there from the buyers, but equally, there was a lot of absorption reload from the sellers. So now what we're looking for tomorrow, and this is the key, okay, first and foremost, we need to see what happens at 65, 64. Okay, you can bet your bottom dollar there's going to be a reaction there. Either we're going to break the 64s and we'll see the sellers become aggressive and hit into the bids, or we'll go below 64s and you'll see those buyers step straight back in and start to lift the offers again. Okay, the key crux of it is someone was reloading the bid there today, but equally the sellers were reloading the offer. That's what you take away from it and nothing else.